Hello guys. Today I will give you just an idea that I got from my experience in trading and investing and in what I see in general. Is that most of the time investors are always the winners if they stay long. That's why Warren Buffett said that if you are investing in a company, it should be like 20 years and more. It is not, you don't invest for 1 month. And I always, when I read newspapers or news, especially in the big media like CNN or CNBC or the TVs or whatever, what they say, always they speak investors. Investors today they sell. This is the word investors is a mistake. Okay? Is a mistake they use a lot instead of telling the people that it is traders, not investors. Investor, for example, someone who is looking for good companies for years. Okay? And he put his money because he know a lot about the potential of this company to become bigger and bigger and bigger. It's not he is thinking to buy today and selling next month. This is a trading, and always we have problems with these words like investors and traders. And I hope one day those TVs and those websites, the big websites that attract a lot of investors and traders, they always tell the truth by the word. If something happened, for example, today there is a bad day, all is red. Instead of saying traders, they say investors. It's not true. An investor, it is not, he will not sell because of a day which is down, or 2 days, or 1 month, or two. Okay? So investors, they don't do that. You see, for example, Warren Buffett, in 2008, he lost 50% of his money. Do you understand what does it mean? 50% of his money lost in that day. Did he sell? No. Okay? He is an investor. He doesn't sell. Why he should sell companies he owns? Like, for example, Coca-Cola. Is it because of the stock market is going down? He will sell the company that makes 1 billion bottle of Coca-Cola, that it is sold everywhere in the world. It is just because there is a bad year like 2008? No. These are what we call the investors. Investors, they don't sell because of a bad year. Now, mutual funds, yes, they sell because they need to buy bonds, to sell some stocks that they own for 1, 2, or 3 years. Yes, they do. That's why you see fluctuations in the market. It's because of these guys. But true investors, they don't sell. For example, Warren Buffett, he owns Coca-Cola and Geico and other companies for decades. But he will never sell. He wants to buy more shares. Okay? He will not sell. This is the thing about investing. And understand that if you want to be an investor, you should invest in some stocks, mostly because we have dividend, because you will make money from dividend itself, because in terms of tax, it is the low tax. That's why Warren Buffett, with his $50 billion or $60 billion, he will pay less tax according to the tax brackets, because he is just paying tax for dividend, which is, I think, 16%. Now, I and you and everybody else, you are doing 25 or 30 or 35% of your income is just because you are not relying on dividend. All the people in America or everybody in the world who are investing for true, he should look for dividend. Dividend is given from companies, and it is in your account, and this is your income. You don't have to make a job. But I understand that for people to make that income they should save a lot when they are young. It's not when you are 60 and you have $1,000, you come here and you want to invest in stocks. Okay, so it should be earlier, like in the 20s, 30s, 40s, and you should always make a decision which companies that you buy, and you continue buy shares. You continue buy shares. If we have good years, you will make a lot of money. If there is 1 year or two which is bad, it's okay, because you are buying more and more and more, and then you can, these stocks will come back, and you will make more and more and more money. And this is how the investors at the end are the real winners in the whole time. Because someone like Warren Buffett, there are thousands of like Warren Buffett. There is not only one, but because he is very famous, and he is with the media a lot, that's why he becomes so famous. But there are the same as him. They bought stocks, Geico, Coca-Cola, and the other, they bought it, and they still own it, and they are billionaires and millionaires. Okay, so understand that an example of that, for example, Warren Buffett stock, which is Berkshire Hathaway, which is a combination, agglomerate, as they say. So why this stock, as you see it, it's always growing up and up and up? Why? Ask yourself. You know, I see one time Warren Buffett in one of his lectures for students at Harvard, and someone asks him a question. I say, why your company, Berkshire Hathaway, why you don't do a split? You know, a split, for example, a stock is $10,000. You split it into two, and instead of having one share of $10,000, you can have two shares of $5,000. Okay? Now, he asked him the question to Warren Buffett. He said, why you don't do split to Berkshire Hathaway? It's a simple question. Because this guy, let's say now Berkshire Hathaway is $300,000 a share. You see how big it is. But before 20, 30, 40 years, how much was it? Before it was like $5,000. People, they laugh. They say 5,000, it will go down because it is too much, $5,000. Now it is $300,000 for one share. Okay? Now what is his answer? He said, I don't need people who don't have money, which is true. If the share is $300,000, who can buy shares? Only billionaires or mutual funds or hedge funds. These are the guys who can buy Berkshire Hathaway only. And they know it's growing up and up and up because, why is that? Because they know he will not split it. And he doesn't need them. Okay? He doesn't need millionaires. He needs billionaires. Like mutual funds, like institutions, like hedge funds, people who have a lot of money. You know, 300,000, it means $1 million, you can buy only 3 shares. $1 million, you buy only 3 shares. Okay? So even if you are a millionaire, you can't buy Warren Buffett stock. So you should need to be a billionaire to buy this kind of stocks. So this is the reason I come and give you a summary. True investors win always at the end. It's just because they stay too long and they see everything. They say good years, they see bad years, they see crisis, they see everything, but they still are in the stock market. But understand that here, when you buy, you should either you should buy companies that they stay, because if you are buying a company that it is launched last year, or and you put all your money and then it disappear, so people they like companies that have history, that have a lot of stuff that investors are looking in companies, competition and the other stuff. So stable, mature companies, not new companies that you don't know if they collapse next year or the other year. That's why always think, if you are thinking about building wealth in dividend, which is the most important thing for investors, is to have dividend. Okay, dividend is a cash payment taken from the price, yes, but it's some money that you can get without selling, and this is the most important thing that you should know about investing in dividend. Thank you very much, and see you next video.